Hello, everyone. Welcome to FolloWebinar, the fourth section. This is Maggie from Follow Me. FolloWebinar is a sharing platform that brings traders together, sharing their insights over the market and communicating with each other. And today we have Kausher, who has 9 years experience trading WTI. Now let's welcome TM Kausher to present how I made $2 million US trading WTI. TM Kausher,
I'm here. Hello, everyone. I am TM Kausher from Bangladesh. I am doing Forex last 9 years. My profession only Forex. Today I talk about WTI. Today follow me webinar. There are some topics and contents. Today I talk to about 5 contents. What is WTI? Understanding WTI. Who control the oil price? There are 5 steps to making a profit in crude oil. Briefly discuss about this matter, and crude oil forecast price 2020 and 2021. So let's start topic. What is WTI? West Texas Intermediate crude oil is a specific grade of oil, crude oil, and one of the main 3 benchmark in the oil price. Along the Brent and Dubai crude, WTI is known as a light sweet oil because it contains 0.24% sulfur. It makes it sweet and has a low density, making it light. Key takeaways: the WTI is crude oil is the served as one of the main global oil benchmark. It is sourced primarily from the Texas and one of the highest quality oil in the world, which is easy to refine. WTI is underlying commodity for the NYMEX oil future contract. WTI is often compared to Brent crude, which is the oil benchmark for 2/3 of the world oil contract. Now talk to WTI, understanding WTI. WTI is the main of the oil benchmark for North American as it is sourced from the United States, primarily from the premium benchmark.
Excuse me, could you share your screen so that you can take a look, please?
Yeah, tell me, Maggie. Any problem?
Can you share your screen, please?
Sure.
Share screen.
I share already screen.
Did you turn your screen?
Yeah. Wait a
Okay.
moment. Wait a moment, man. Just wait a moment.
Evaluate on the PPT as well.
1 second. Yeah. Lot. Now see my screen?
Yes, cool. Thank you.
Now see my screen?
Yes.
Now see my screen? Yeah. Understanding the WTI. What is the main bench? Maggie, you hear me? Hello?
Hear you. Please continue.
Thank you. Now talk to understanding the Texas about WTI. WTI is the main oil benchmark from the North American. Is the assist source from the United States, primarily from the premium bench. The oil comes mainly from Texas. It then travel through pipeline where is the refined in the Midwest and the Gulf of Mexico. The main delivered and price settlement point for WTI is Cushing, Oklahoma. The Cushing delivery system contains of the 24 pipelines and 15 storage terminal. The hub has 90 million barrel of storage capacity and accounts of 30% of US oil storage. The inbound and outbound capacity is 6.5 million barrel a day. Cushing is known as the pipeline crossroad of the world. Now talk who control the oil price. There are four contents. Who control of oil price? United States, OPEC, OPEC versus United States. So now discuss who control the oil price. Up until the midline of the 20th century, the United States of America (US) was the largest producer of the oil control of price. In the year of follow, OPEC controlled the oil market and price for most of the later part of 20th century. However, the with the discovery of the shale in the US and advance in drilling techniques, American has re-emerged as a top producer of oil. In this article, we explore the historical battle between OPEC and United States of America, the control oil price, and how world even they influence the struggle. There are a lot of K. We talk now United States. Oil was first completely extracted and put to use in the United States of America. Consequently, pricing power of the foolish fuel lay with the USA, which was at that time at largest producer of oil in the world. In general, oil price were volatile and high during the early years because economic of scale during extraction and filling, which mark the current extraction and drilling process, what are not present. For example, the early 1860, according to Business Insider, the price per barrel of the oil reached a peak of US $120 today's Trump, partly due to rising demand. Partly due to rising demand resulting from the US Civil War. The price fell by the more than 60% over the next 5 years and rose by 50% during the next 5 years. In 1901, the discovery of the cleaning top refining in the eastern Texas opened the floodgate of the oil in the US economy. Its estimate in 1,500 oil companies were characters within a year of discovery. Increased supply and the introduction of speculation pipeline helped future reduce the oil price. This supply and demand for oil rose attention with the discovery of the oil Persia in 1908 and Saudi Arabia during the 1930s. Now talk OPEC. OPEC means Organization of the Petroleum Exporting Countries, was formed to negotiable matters concerning oil price and production. As of the April 2020, OPEC countries including the following 30 nations. The nation Algeria, Angola, Congo, Guinea, Gabon, Iraq, Iran, Kuwait, Libya, Nigeria, Saudi Arabia, United Arab Emirates, and Venezuela. Now, the 1973, the oil shock swung the petroleum in OPEC favor. That year, in reason to American support for Israel during the Yom Kippur War, OPEC and Iran stopped oil supply due to United States. The crisis for the fair reaching effect on oil price. In the spring of 2020, the price collapse aimed the COVID-19 pandemic and economic slowdown. OPEC and its allies agreed to historical production cut the stable price, but they dropped to 20 years low. Now talk OPEC versus United States. But OPEC monopoly over oil price seem to be the danger of slipping. The discovery of shale oil in North America has helped the US achieve near record volume of oil production. According to the Energy Information Administration, American oil production was 12 million barrels per day in 2019, making them the world's largest oil production country. As a December 2019, USA was the world top producer, followed by Russia and Saudi Arabia. However, Saudi Arabia is still the global leader of exporting oil, followed by the Russia and Iraq. In fact, these three nations, all member of OPEC Plus, account for the nearby 36% of the supply of oil for the rest of the world. Shale is also gaining popularity beyond American shores. For example, China and Argentina have drilling more than 475 shale will between them in the last few years. Other countries such as Poland, Algeria, Australia, and Colombia are also exploring shale formation. A viable Algeria or alternative to OPEC Plus could shift the power structure. The Iran-US nuclear debate could be impact oil production and supply in the future as future discord would provoke more sensation for critical production, which would affect prices. Other fact that impact the oil price of the nuclear and budget of Arab nation, which needed high oil price to fund government spending program. Also demand continues to increase from developing economies such as China and India future inflation price in the face of constant production. The reason that whole pricing over power over oil control vital levers of the follow economy. The United States controlled oil price for the majority of the previous century, only to send it to the OPEC countries in the 1970s century. Recently, events, however, have helped to shift some of the pricing power back toward the United States of Western of oil companies, which lead OPEC to from an alliance to Russia, etc. All of the OPEC plus. As oil price rise to oil companies pump out more oil capacity, higher profit, which will limit OPEC ability to influence the price of oil. Historical OPEC production cut as devastating effect on global economics, which has been somewhat diminished recently. Also, the US is one of the world top consumer of oil and production at home increases. There will be less demand for OPEC oil in the US. But it is important to note that although the United States is the top producing nation, the top export are production pre-domestic member of OPEC Plus, which means that they are still the key player in the oil price determination process. There are many come a day when OPEC loses a cloth, but that day is not yet here. Now talk to five steps to making a profit in crude oil. There are five contents. Learn what moves crude oil, choose between Brent and WTI, read the long-term chart, pick your value, bottom line. Let's do it. Crude oil. Trading effort, excellent opportunities of the profit in nearly all market conditions due to its unique standing within the world economic and political system. Also, energy sector volatility has risen sharply in recent ensure storage strength that can produce constant return of short-term swing trade and long-term timing. Market perception obtain the fall to take full advantage of crude oil fluctuation either because they haven't learned to unique characteristics that this market or because they are unaware of the hidden pitfall that can eat into earning. There are some case takeaways. If you want to play the oil market, this important commodity can provide a highly liquid asset class with which to trade several strategies. First, decide if spot oil, a derivative product like future or option or exchange trade produce like an ETN or ETF are most appropriate for you. Then focus on the oil market fundamental and what drives supply, demand, and price action as well as technical indicator glance from chart. Here are 5 steps need to make a consistent profit in the market. Learn number one, learn what moves crude oil. Crude oil moves through proportionality supply to demand and appreciated by worldwide output as well as global economic proportionally. Oversupply and shrinking demand encourage trade to sell crude oil market to lower ground while rising demand and decline or flat production encourages traders to bid crude oil higher ground. Tight convergence between positive elements can produce powerful uptrend and the surge of crude oil to 145.81 cent dollar per barrel in 2008. While eight convergence between negative elements can create equally powerful downtrend, like the August 2015 collapse to $37.75 per barrel price action tend to build narrow trading range when crude oil react in mixed condition, with sideways action often proceeding of the year at a time. In the spring of 2020, the oil price collapse aimed the COVID-19 pandemic and economic slowdown. OPEC, its allies agreed to historical production cut to stabilize price, but they dropped it to 20 years low. Now understanding the crude oil, professional traders are hedge dominate the energy future market, which industry players taking positive of offset physical expose while hedge fund speculate on long and short term direction. Retail traders and investor expert less influence here than in more emotional market like precision metal or high bit growth stocks. Ritual influence rise when crude oil trend sharply, attracting capital from small players who were brought down into the market by front page headlines and table pounding talking heads. The subsequent waves of greed and fear can constantly underlining trend motion. Choose between Brent and WTI. Crude oil trade thought two primarily mistake. WTI crude and Brent crude. WTI organization in the US remain base and the other local source while Brent come from more than a dozen field in the North Atlantic. These variants contain different sulfur content and API gravity with lower level commodity called light sweet crude oil. Brent has been a better indicator to worldwide pricing in recent years. Although WTI in 2017 was more heavily traded in the world future market after 2 years of Brent volume leadership. Pricing between these grades stay within a narrow band of year, but that come to an end in 20 2010, when two marks delivered too sharply due to rapidly changing supply, there was demand environment. The rise of US oil production, driven by Shell and Franklin technology, increased WTI output at the same time when drilling underwent a rapid decrease. US law dating back to the Arab oil invasion to 1970 aggregate this division, prohibit local oil companies from the selling their inventory of the overseas market. This ban was moved in 2015. Now read the long-term chart. Here I show oil market historical chart. There all of guys see there a graph, historical graph. There a 1985 to 2020. We see the oil price 1985 to 2020. There a historical price movement. There a top $145, and this current year 2020 is price is zero. Now its current price is $32. WTI crude oil rose after World War II, peaking in the upper $20 and in turning the narrow band until the embargo in the 1970. Trigate parabolic rally to $120. It peaked late in the decade and began to corporate declines, dropping into the 10 ahead of the new millennium. Crude oil entered a new and powerful uptrend in 1999, rising to an all-time high at $157.73 in June 2008. This one. In the drop into the massive trading range between that level and upper $20, settling around $55 at the end of 2017. As of February 13, 2020, it closed at 51.52 cent dollar. Now pick your venue. The NYMEX WTI light sweet crude oil future contract leader in exchange of 10 million contract per barrel per month, offering superb liquid. However, it is relatively high risk due to 1,000 barrel contract until and 0.1 per barrel minimum price fluctuation. The US oil fund offering the most popular. Wait a second, I missed it again. The US oil fund offering the most popular way to play crude oil through equities positive average daily volume in excess of 20 million share. This security tracks WTI future but is vulnerable to contango due to discrepancies between firm month and longer date contract that reduce to size to price extension. Now talk to crude oil price forecast 2020 to 2021. Brent crude oil price will average $33 per barrel in 2020 and 45.62 barrel in 2021, according to most recent forecast from the U.S. Energy Information Administration monthly short-term energy outlook. This is a this from a average of $64.36 per barrel in 2019 and reflect to drawdown division of 3.58 per barrel for 2020 compared of the previous estimate. In my view, oil price in 2020 and 2021, my opinion, my view, 2020 is going to touch end of this year, going to touch maybe possible to touch 40 to $45, and then begin come 30 this $30 this year. Here is graph I show all of guys. This year possible to close 35 to $45 this range, and end of next coming next year is possible to touch $55. If you are going to long term trade, you can choose to buy this option. It's possible to buy better price is 30 to $35. It's long term trade, is doing good better for good profit. Oil oil price forecast depend on the interaction between supply and demand for oil on international market. Among of the most important supply side factor high weekly on the pricing expensive are the US shale oil production, US fuel oil stock, and OPEC oil supply. Believing the chronology of the oil price swing since the end of year last year. In the December 2019, Brent crude price averaged $67 per barrel, which is $10 higher than at the end of December of this previous years. The reflective expression of the economy's condition in 2020 will be improved. However, in January, oil price lost all the gain accumulation since October due to the coronavirus outbreak in China, which affected oil demand due to travel restriction and discrete entertainment spending. In early March, OPEC and non-OPEC partner countries failed to reach to agreement on the production cut. As a result, the two largest oil producers, Russia and Saudi Arabia, unset a oil unset a price or floating market with the cheap oil on the background for displacing global to oil demand and coronavirus turned to pandemic. This sent oil price down to historical low. On April 12, OPEC countries on their next extraordinary meeting ultimately agreed to cut oil production by 9.7 barrel during May and June. On the exception of the successful deal, oil price started to rebound period on this meeting. But on the April 20 price for WTI future that were due to expire the next day plunged below zero for the first time ever. The reason is that because of the pandemic, it determined shrinkage of oil demand due to the lockdown measures to curb coronavirus spread. Companies filled to the brim all their storage capacity with unused oil, and now there is no room to put the oil. This is why they try to get rid to future contract that are about to come due to their cost. Now talk to all of guy. How can I make 2 million USD on oil trade? I'm always looking oil price weekly and monthly forecast. weekly opening market price and weekly closing market price. I'm always looking and always looking all demand and supply, all environment policy. I'm always doing long trade, not a short trade. Day trading, I'm not a day trading. I'm a long trader, weekly, monthly, and quarterly. That's why I can gain. And you must be follow your money management. If you're doing only 10% user total fund, you never lose your money. You must be follow your money management system. There are lots of small traders losing money because they invest small invest and risk highly. Need to short invest and lead to more profit. That's why you're losing your money. You must be follow your money management and be learn must be learned. You have any question, any guys? Uh, the upside 10 on the US oil and the Mr. Jack, I give you answer your question. The upside 10, the US oil price aimed expansion to people in the demand global conflict for view and when it is possible to resist to at the next 100 years. This year possible to touch, Mr. Jack, this year possible to touch $45 per barrel. This year possible to close oil price. And next year possible to touch 55 to $50. This range. There are a lot of Shakil. Hello Shakil, how are you? Do you have any question?
Hi, TM Kausher. I'll just read out the question for you. Because I saw Mr. Amand ask how much deposit he should trade for a long term, for long trade.
Long trade. Minimum, if you oil trade, minimum deposit is $5,000. And you put only 0.10 on 1.0 lot size only, not a big.
Okay, thank you for answering the question. So could you share how much, share some experience of how you made to $2 million US over the past 9 years, please?
Yeah. Wait a second. My first deposit is $50,000. And I am that time I am starting $50,000. I am choosing currency. I am losing maximum trade losing currency. Then I'm choosing oil and gold. Now I am starting and reading every day. I am analyzing every day. I am oil historical knowledge and day by day knowledge I grow. And I am try to always long trade, not a short trade. I am always long trade, monthly, 1 month, 2 month, 3 month. I'm waiting. When I get a profit, then I close. Never take a loss. I'm always follow money management. I collect information about oil, Saudi Arabia, America, Russia. I am always collected news and historical drawdown this year. That day I gave a $10 minimum. I think that day I made a big profit that day. Remember one thing, you must be follow your money management. If you follow your money management, you never lose your money.
Also, a question from Dennis. If you mention risk management is not at only 10%, how much capital require for your big profit is on your trade records?
If you need to good invest minimum 5,000, if you need to first you know how much earn every month you want, then you make sure if you want every month earn $2,000, you must be deposit 20K. If you earn $5,000, you must be deposit 30K minimum. Then you earn every month. If you earn deposit $2,000, you never earn $2,000. If you deposit maximum, you need to make sure profit only 5 to 10% every month. Then you earn slowly. You must be earn slowly. If you aggressive, you lose your money. It's better oil trade. You must be deposit 5 to $2,000. It's better for oil trade. And make sure you put small lot use first time. Then you understand everything. Then you put more lot. But never first time use big lot. Just use small lot. Then you 1 day, 1 month, 2 month, 1 year. Then you understand oil market. Then you put big lot, big lot, big lot. Understand?
A question from Tamiti. He asked how your money management calculation per entry. Is it 2% from your balance per entry?
I use only 1% or 2% maximum. When I make sure is now market going up or down, then that time I use only 10% fund. Otherwise, only 1% or 2% fund now I'm using. When I make sure is come from going up or come from going down, then I use 10% more than maximum 20%. But it's little bit time, not a maximum all time. It's only sometime. Now today going oil market is down. Now I use today 6% only, not more than. My total fund using 6%. I think I gave you already single in follow me website to the oil market is down. You see my oil market my profile. Check it. Today morning I send oil. Send a message to the oil market down and gold market down.
Okay, the next question is from Forehead. He asked if you could tell him the oil price this year.
I told already. I think Mr. Farad this month, this year, oil price has possibility to $45 near. Maximum $45, 40 to $45 this year, close. Before going to 40 to $45, market must be come back 25 to $20. Then going 40 to $45. Remember it, everyone. Oil market must be come back 20 to $25 again. Then going to 40 to $45. Any more question?
Question from Iris. She asked, can she trade WTI if she has no experience?
Iris, you must be learn, ma'am. Mr. Iris, you must be learn about WTI. Then you must be doing trade. Otherwise, you never put any trade WTI because oil market is too much learn about world, about OPEC, about everyday news collect from Saudi Arabia, Russia, and USA. You need to know world environment, then you're going to put oil trade. Otherwise, no need. Otherwise, choose currency, anything, but no need WTI. When you understand all news, when you go every day collect uh, all news, then you must be put oil trade because oil price must be movement, all environment. If you know all environment is better, then you put oil trade. Otherwise, no need.
Another question from Fury. She asked which venue do you pick?
Which venue do you pick? I put it every Monday. I put it open every Friday night and close Monday to Thursday. Otherwise, I never do put any day every day. I put it Friday and close next week Monday or next day after next week Monday. Where you do normally read news about oil? You must, Mr. Robby, you must be follow oilprice.com. There are a lot of oil current oil news. You must be follow oil news site. You must be follow FX Street. Then you go to understand oil price. Mr. Robby.
Is there any other questions? Okay, so the last question is from me. I want to know that if you have already spent all your $2 million US dollar, so where did you spend all your money?
Oh, I spend my all of money, my family. I have a luxurious. I want to buy luxurious home, luxurious car. I have it on boy and girl, son. I spend all of money, my family, and I have some money is my bank, and I am trying every day earning. Every people earning for his family, and also I am earning for all of my family. I am some money. My country is still lockdown. I'm trying to expend poor people maximum. I am now last month and this month current. My earning 25% money expend poor people. Only take 75% myself. Maggie.
Cool. So thank you so much, TM Kausher.
Thank you.
All of you guys can follow TM Kausher on Follow Me platform.
Okay.
And thank you for your wonderful sharing. And we hope all our listeners can enjoy this webinar. And if any of you would like to be a presenter next time, please get in touch with Follow Me Essays. And thank you all once again. See you next time.
Thank you.
Bye-bye. Thank you.
Thank you.